MIDF Research believes Malaysia could be free of movement control orders before the fourth quarter of this year as the government ramps up the national vaccination drive. In a note today, the research house said, based on the current pace, it is possible to reach a 55% vaccination rate by September. It cited as an example the UK's decision to remove restrictions such as physical distancing and wearing of face masks in public places once 54.4% of its population were fully vaccinated. The UK now has about 55% of its population fully inoculated. MIDF Research said it can be argued that the UK is able to ensure that its health system remains robust, pointing out that the resurgence in new infections was not accompanied by a corresponding jump in hospitalisation and ICU usage rates. On this score, it said the prospect of an MCO-free Malaysia even before the final quarter of this year is not unlikely. Under this scenario, the research house expects the equity market to regain its mean valuation range as early as in September. Moreover, it said pent-up macro demand can be expected upon the economic reopening, and a buoyant recovery in the final quarter would help to further lift equity market sentiment as well as valuation. It kept its FBM KLCI year-end 2021 target at 1,700 points. About 83% of the Klang Valley's adult population have received at least one dose of the COVID-19 vaccine as of yesterday, while almost a third or 29.7% of its adult residents are fully vaccinated. This is according to the latest tweets by the Special Committee on Ensuring Access to COVID-19 Vaccine Supply, citing data from the COVID-19 Immunisation Task Force. Under Operation Surge Capacity, 238,518 vaccine jabs were administered in the Klang Valley yesterday, some 60% or 144,285 being first shots. The plan is to have all adult individuals in Kuala Lumpur and Selangor at least partially vaccinated by August 1st. In total, Malaysia administered 553,871 COVID-19 vaccine doses nationwide yesterday, taking the total to over 18 million shots. Meanwhile, daily COVID-19 cases jumped to an all-time high of 17,405 today, taking cumulative confirmed infections to 1.06 million. According to a tweet by Health DG Tan Sri Dr. Nur Hisham Abdullah, Selangor led with 7,171 infections, followed by Kuala Lumpur with 2,880. There are currently 175,113 active cases across the country. The 143 fresh fatalities brought the death toll to 8,551. Separately, Deputy Health DG Dato Dr. Chong Chi Kiong said the public should not be alarmed over the number of daily new cases and that the figure is expected to rise in the Klang Valley in the next few days. This is because the Ministry of Health is encouraging more self-testing and the use of antigen rapid test kits in a bid to identify as many cases as possible to reduce transmission in the community. Bursa Malaysia booked its best ever 6-month performance since its listing in 2005, fueled by a jump in trading volume in equities. It recorded a 39.4% increase in first half FY21 net profit to 210.4 million ringgit, thanks to higher operating revenue up 31% to 420.2 million ringgit. For the second quarter, the stock exchange operator witnessed a 3.2% hike in earnings to 88.97 million ringgit, while revenue rose 9.1% to 196.1 million ringgit. It declared an interim dividend of 24 cents per share. Bursa Chairman Tan Sri Abdul Wahid Omar said in a statement that in line with the record financial performance, Bursa is allocating 3 million ringgit to procure some of the much-needed equipment to help hospitals treat patients with COVID-19. He also said that Bursa remains well-positioned to grow sustainably and responsibly, and that the volatility in the securities market and sustained low interest rate environment are expected to continue attracting investments and trading. Meanwhile, its CEO Datuk Muhammad Umar Swift said, to improve the quality of activity in the market, Bursa will continue to place importance on financial education to sustain market interest and enhance its platform to support the investing community in growing their wealth and managing risk against volatilities. Shares in Bursa rose 0.9% to end the day at RM7.60. Lotte Chemical Titan Holding, or LCT, saw its second quarter FY21 net profit retreat 13% quarter-on-quarter as feedstock prices started to catch up with the rise in the selling prices of its petrochemical products. Earnings totaled RM382.29 million versus a record RM440 million in the first quarter of FY21. Year-on-year, however, the latest quarterly profit was still up 330.9% from RM88.72 million as average selling prices remained higher by 69%. Quarterly earnings per share stood at 16.81 from 3.9 in the second quarter of FY20. Meanwhile, revenue rose 61.3% year-on-year to RM2.54 billion. For the first half of FY21, LCT booked a net profit of RM822.3 million against a net loss of RM81.34 million previously, while its top line was 61.6% higher at RM4.91 billion. LCT said in a Bursa filing that given the price correlation of its naphtha feedstock with crude oil, rising global crude oil prices would be an area of concern should its product prices remain stable. It said some new additional capacities in the region are also expected to come online in the second half of this year, and that could spell some downward pressure on product average selling prices. It also noted that the emergence of new infection waves across Asia would likely pose some downside risks to the region's full recovery. LCT's shares closed 3.1% lower at RM2.78 today. IGM Corp plans to distribute a potential special cash dividend of 15 cents per share or RM542 million to its shareholders after the completion of its stake sale in its plantations unit. To recap, the group is selling its entire 56.2% stake in IGM Plantations to Kuala Lumpur Kepong for RM1.53 billion. In a Bursa filing today, IGM said the quantum of the final special dividend is subject to its board's final deliberation, taking into consideration, among others, future plans and the number of outstanding shares in the company as at the entitlement date. It said the relevant announcements will be made in due course. IGM said it also plans to utilize the proceeds to undertake share buyback activities for capital management purposes. In total, RM800 million was allocated for such activities. It has earmarked RM430 million of the proceeds for future investment opportunities and capital expenditure in existing business. Another RM300 million will be used for working capital and the remaining RM4 million to defray expenses in relation to the disposal. Meanwhile, independent advisor Mercury Securities has advised IGM Plantations minority shareholders to accept KLK's takeover offer as it deems the deal as fair and reasonable and not detrimental to the interests of the non-interested shareholders of IGM Plantations. IGM's shares ended trading 1% higher at RM1.85, while IGM Plantations closed unchanged at RM3.01.